Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. As always, we need to go over some important housekeeping details about the session, and then I'll introduce Rob. First and foremost is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously and you've seen this, the main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it if you like, but that's the main point to take away. All right, so for those of us out there that have been around for some time, we already know this process, but for anyone joining us for the first time, we do have a method for asking questions. Rob goes through his general presentation. We'll find some case study considerations for this week, and then with the time remaining, he will open it up to a combination of questions from all of the live streaming platforms that we are currently live streaming to. So knowing that, we are going to have limited time for the Q&A portion. If we don't get to your question, just know it has nothing to do with the validity. We just only have so much time in this session. I'll also take that as encouragement to attend the insiders meeting when Rob holds a 45-minute Q&A portion at the end of that meeting, which obviously means you'll have a much higher likelihood of getting your question addressed there. Lastly, any support related queries I can handle in the chat window. And of course, for any interaction amongst other attendees, please feel encouraged to use that window. Just make note that by default for our host audience, it goes to host and panelists. So if you would like everyone on the webinar to see your message, be sure to change that to at the bottom to everyone. All righty, so that gets out the housekeeping details, as always, that we need to cover. The CPI report came out a bit higher than expected. Market kind of seemed to shake it off, so we'll see what tomorrow brings. And interested to hear Rob's thoughts on that and looking forward to interacting with you all. So thank you for joining us live. At this moment in time, I'll introduce who we're all here for, the man of the hour, and that's Rob Roy.
Thanks, Zach. Okay, everybody, welcome to this week's TradeFinder Live. There it is. Button to turn the screen on. Never sure why anybody wants to watch me while we go through this, but there we are, video. How we doing? So as Zach said, we'll talk about the markets, not just the U.S. market. We'll go through the international markets as well. Lots of stuff's been going on worldwide, as you're well aware. Then we'll look at any alerts that we may have closed for our alert subscribers at EWOtrader.com, give you an idea how that works. We'll review case study considerations that we've looked at previous trade finders, and we'll see if we can find one tonight. With whatever time we have left over, we'll open it up to live Q&A, get to as many of you as we can in the allotted time. So I'll just stop talking and we'll get to looking at the markets. As Zach said, the CPI report came in a little higher than expected, a 10th higher on the core number. I guess something I can't wait to tell you. And then perhaps you've seen it already. And then the core number or the regular year over year was 6.4%. That was 0.2 higher than expected. But did you know that now we have a super core CPI? So we got the regular CPI number, then we got the core CPI, which is ex food and energy. So they kicked those out because nobody cares what we pay for gas or food. Being facetious, obviously. But now we have a super core where they're kicking out shelter too, because house prices have gone up. So anything that's going up, we got to kick those numbers out so inflation doesn't look so bad, even though we know what it costs to go to the grocery store, etc. Just couldn't believe it when I saw that. I really hadn't seen the super core before. Maybe some of you had, but I'm just like, what? Why even have a number if you're just going to throw everything out? Anyway, we could spend a entire session on what the CPI is made of, and I've got another soapbox on that, just like the Fed, everything else. But looking at the market did kind of shake it off. The futures were down. The market opened to the downside. We recovered, closed off the high. So it wasn't one of those days where we closed exactly at the high. So between yesterday and today, pretty constructive start to the week. What's interesting to me about the markets, though, is at the end of last week, I mentioned this last week, but they do an order imbalance. Like if you're watching the live news, they'll tell you what the imbalance is to the buy side or the sell side. And up until the end of last week, there was normally an imbalance to the buy side, meaning there was a lot of buy orders that have to be filled. Normally, that means the market moves up right at the end of the trading session because they're trying to get those buy orders filled. And again, nobody wants to sell. You have to raise the price until somebody says, okay, I'm willing to sell. So when you see an imbalance like that, we used to get them all the time at the beginning of the trading day back in 1999, 2000, stuff like that, where the market was screaming to the upsides. There was always an imbalance in the morning. Sometimes they would hold the market, wouldn't open for 30 minutes or so because they couldn't get so many buy orders paired off so they could get the market open. But the long-winded story here is yesterday and today both been a lot of money, a lot of big imbalance to the sell side. So does that mean some of the big boys are starting to take some gains? Seems that way. Is that enough? It's not enough. 2 days doesn't make a big difference, but it's something to watch. If that continues with the FOMO thing that I was telling you about, where some institutions are saying they're starting to get the calls now from retail clients that are upset that they've missed this run, they want to get in, and that's when you usually have to be a little bit nervous about whether or not we can continue the upward move. But nonetheless, we're above the 10-day moving average. Pretty constructive start to the week, even with all that stuff going on. So we watch the charts, and the charts will tell us when things are turning. So far, we still have this zigzag with the potential 100% extension, as you're aware, dead in the middle of that wave 5 tap box. So having some consolidation here at the 61.8% fib level. It's a strong fib level. That's not a negative at all. And the fact that we're holding above the 10-day moving average and holding above 410, I think is key as well. So we'll see. The futures are down a bit right now. They just took a leg down just before we came on, just about 10 minutes ago. So at this moment in time, the futures are down 15. That's nothing in the grand scheme of things anymore, but we'll see how that plays out by the time the market opens. Everything could be vastly different by then. So as far as the S&P, the zigzag is still in place. Constructive start to the week, even with some negative news, if you will. Expectations that maybe the Fed may have to go one more rate hike than what they were thinking. But does a 1/10 or 2/10 make that big of a difference? The Fed squawking, other than Chairman Powell, who's Mr. Calm, Cool, and Collected now, from what they're saying, are still pretty hawkish if you listen to the Fed governors speak when they get their opportunities to get in front of a mic. But the market so far is holding in there pretty well. The next step is going to be to take out this wave 3 high. If we can do that, then I think we've got a pretty good chance of completing that zigzag and heading up to that 100% extension. But for me, the next show me event is taking out that wave 3 high, going back to the 2nd of February. I thought I would bring up the VIX real quick before we started looking at interest rates. Interest rates acted kind of interestingly today. Talking about that, are they going to have to do another rate hike? But look at that. How does that make any sense? Big move down in the VIX. Why? I mean, we shook off some early selling, but what does that mean? That's a surprising move out of the VIX to me. And so if you're bearish, you're saying, okay, well, we didn't really have a big update today, and we're down here with the VIX getting near the lows. So likely we're going to have a move back up in the VIX, and that's usually coincides with a move down in the markets. But I just thought that was really interesting, and I wanted to share that with you. Why such a big move down in the VIX today when it's already in the lower end, when it really wasn't a big, massive update? And so if we take a look at rates, big outside day here, and, with the CPI report, you likely could expect that there is some movement out of the interest rate realm. And so we're getting close to that level where I want to see rates hold. Talked about this numerous times for those of you that watch us all the time, and welcome to everybody on all the varying live streaming services. We appreciate you taking some time to be with us tonight. Getting up towards this previous wave 4 is what's supposed to happen from the Elliott wave standpoint, and I'd like to see it hold there. I really would not want to see much of a break higher than this, because then I think that is a negative for the markets. And I think we can handle up till here. And that's what, again, is supposed to happen from the Elliott wave pattern. But then when the corrective mode starts, I would like to see it bouncing down from where that wave 4 level is. I'd hate to see that taken out. I just think that's another headwind for the market to continue to move higher. And then if we look at the dollar, I like the dollar. I think the dollar is acting really well. It's staying in that range, right in through this area here from the wave 5 to the previous 4. And so the dollar is acting pretty constructive. We'll see if this big outside day, and then if you're new or not familiar with outside day jargon, that just means the high of the day was higher than yesterday's high, and the low of the day today was lower than yesterday's low. So the entire bar is bigger than the trading range from yesterday. What does that mean? Well, obviously a lot of intraday volatility, but sometimes it means a change of direction. And when you see that kind of thing occur, it's like a doji for you candlestick charting fans. A lot of people say, oh, if we have a doji, we're going to have a change of direction. But if you're a hardcore candlestick person, you know that a doji simply means indecision. Oftentimes that comes with a change of direction, but the doji doesn't mean a change of direction is coming. It just simply means there's indecision in the day's trade. So an outside day could be construed in a very similar fashion. All right, so let's take a look at some of our other markets. We take a look at the Dow, and you can see that really not a breakout of that triangle yet, but we're spending a lot of time in the upper end of the range. It's almost kind of messing up the symmetry here of the symmetrical triangle. No pun intended, but that's the way it works. So we keep trying to break out of that, but come back down. And the high of the day, I think technically took out that high. So 343.27 and 343.53. Technically, we broke that high. And remember, I was saying that I wouldn't count a breakout of the triangle until we took out that high. So these other ones didn't count to me, but the high of the day did, but we didn't close there. We closed back down towards the point of the triangle. So I still don't think you can call this a breakout of the triangle yet, but it's interesting that it's trying to break out of the top. Is that positive for the rest of the market, or do we need money to come out of the Dow to go in the S&P and the Qs? It's going to be interesting to see how it plays out. As you know, the primary markets normally move in lockstep together. But today, looking at the Qs should be quite interesting based on what happened with the CPI report. And pretty nice turnaround there too. So again, a constructive start to the week. Both days above the 10-day moving average, holding above 300. Barring something negative tomorrow, you'd have to say that we shook off that CPI report pretty well. And we'll see how the next couple of trading days go. Everything could be different by the end of the week, but I think that's pretty constructive. But we're at the same spot here as we are on the S&P, as we need to see this wave 3 here taken out. That's the next step to move higher. But doji right there at 300, held it, broke above it, above the 10-day moving average, not overbought. Qs look really good to me as well. And then when we look at the IWM, we talked about coming down to test 190, and that's exactly what happened. How about that? I love it when a plan comes together. So we got up to 200, came down. I'm mused on whether or not this would be a test. 190 was resistance for a while. Makes sense to come down and test it. I think we talked about that last week. It did. And so there we go, bouncing off 190. And then the key is, do we now go up and test 210 to see if that is resistance again, like it was way back, and also happens to coincide with where that wave 5 target is. So, considering everything, constructive start to the week from the charts. Something to keep your eye on is these order imbalances at the close that are heavily to the sell side on both yesterday and today. That is a change again of what's occurred before. A weird move in the VIX today, I thought, with what happened with the markets. And so I think you have an argument either way on where we go from here. If you're bearish, you can hang your hat on the VIX, interest rates moving up. Both of those things would make you nervous for an upward move and give you some confidence on a downward move. But the charts still look so far pretty constructive, and that's what we look at. We're technical traders. And the fundamentals, it's great when you have fundamentals on your side. And I'm not anti-fundamentals. I was trained on fundamentals as a financial advisor right after my golf career. And I just prefer technicals. I've traded both ways. And I think trading technicals with a supporting cast of fundamentals makes sense. But they're a confirming indicator to me. They're not a lead indicator. That's just my viewpoint. And I know there's plenty of people that would argue with me, but that's what makes markets, right? I know there's a lot of people that fundamentals come first. And I've tried them both. It's been my experience. Technicals are more accurate. And so that's the way we look at things. So we look at the charts, let the charts tell us what's going on and what's likely to continue to go on from here. So let's take a look and see how old Mr. Bitcoin is doing. And we had broken that 10-day moving average, and you can see now, let me get these, there we go. The high now is bumping its head on the 10-day moving average where we were using that as support. It's trying to hold there. The 30-day moving average is that fuchsia colored line. I don't view that from much. I know there's people look at the 10-day, the 18-day, the 20. It's like every moving average somebody looks at. The reason I have the 30-day moving on average on there is because I was taught from floor traders that's something they look at for longer term trending moves, the 10-30 cross. Institutional guys tend to look at that. And so I look at that and separation, etc. But I don't view the 30-day as much of a support resistance line. That's more for the 10-day for short term and 50-day for trending for me. So this is just a coincidence, in my opinion. The key here is that we're bumping our heads on the 10-day moving average. From a positive standpoint, if you're bullish on Bitcoin, obviously you're happy with the move up to 24 and not too crazy about the break of the 10-day moving average, but you have to be happy that we haven't come down to test 20,000 yet. I thought if we gave up the 10-day moving average that maybe we're going to come down. Same scenarios we just talked about with the IWM where 20,000 had been resistance for a while. Is it now going to become support? I guess resistance and support said together comes out resort. I feel like it's really trying to hang in here. Now it's in no man's land. So can it hold there? I don't think we stay here very long. So I think Bitcoin either gets back to 24 or comes down and tests 20, but I don't think we do much more of this sideways stuff. But we'll see. That's just my opinion. So let's see what's going on down under with the EWA. And you can see that we finished that wave 5 as we talked about, came back. So here we're going to look at 2 in a row that are sitting on the 30-day moving average after I just got done saying I don't really look at it for support resistance. But I still say that's coincidence unless every chart looks that way, and then I'll look foolish. But that's the way I view things. So sitting here above the wave 3 high, I think is key. Closed at the 10-day moving average both yesterday and today. It's trying to hold here and make another run to the upside. I think that looks pretty constructive. I do feel if we give up 24 that it is a pretty quick move, and that's a tradable move in my opinion. If the EWA gives up 24, then it's likely coming down to 22 and could happen in a short period of time because there's nothing in the way, absolutely nothing. That move up from 22 to 25 was straight up in a 45-degree angle, really nice move. So there is no corrective moves on that way up. So there's nothing to form resistance on the way down. So holding 24 is really crucial on the EWA. So if we can stay there, we'll look at the XJO Thursday night as we always do. But if we can hold here and mount another run, very constructive for the EWA. Breaking 24, probably going to 22. And that wouldn't be too much fun. Taking a look at Canada, they're in the news with us shooting stuff out of the sky now. So anything that looks like anything is getting shot down now. So careful flying your drones and everything else around. Taking a look here at EWC, looks pretty good to me. We got above this wave 3 high, a little further extension than the Aussie market, but just barely. But kind of bouncing off that 10-day moving average as well. So I think both the EWA and the EWC look like they want to try to make another run higher. They look ready to go. Just need to break that last point of resistance if we can get above this wave 5 high and take off. 35 is the key here, just like 24 was on the EWA. We need to hold 35. If we don't hold 35, then we come down to 33 really quickly, because it's the exact same scenario where there's nothing stopping it. There's no resistance on the way down. So a break of 35 gets us to 33 rather quickly. Summarize again, they both look like they want to go higher. It's just if they don't, what happens? So a lot of people say, we always talk about both sides of the market. Well, nobody has a crystal ball. Nobody knows exactly what's going to happen in the market. We look at the charts, we analyze them, we interpret them the best that we can, and we put the percentages in our favor the best we can. Nothing's 100%. So what if it doesn't work? They look like they want to break higher. That's the point. What if they don't? What happens then? You just sit on your thumbs and do nothing? You can trade to the downside on both these cases, because they're both going to have pretty significant moves lower if they break those support levels. So I like presenting both sides of what can happen. So some people it irritates, because I get the comments. I know. Looking at the INDA going down here towards 40, and it's held there. And boy, it needs to. Some of the, it's kind of the whole FTX thing with that Dina, whatever, all that stuff that was going on, calming down a little bit. Maybe we can hold 40 here. I wasn't sure about it when we went up to the 10-day moving average and satisfied the oversold condition and came right back down. It really looked like it wanted to come down to 39, and it still may go down to 39 and even hit this wave 5 target just a little bit lower than that. But it's really trying to hold 40. Next couple of days will tell us a little bit more there. If you're long, to me, if you're long the INDA, this is no man's land, because if it breaks 40, it goes to 39, and a break higher is going to run into resistance again at 41. So, I mean, if you're long, then you're long. But if you're looking for an entry, I would look for the more conservative route of get back above 41 first, because it could just run up there, bump its head, and come right back down. So that's the way I would look at that. Germany, some people were flexing on the live YouTube that we did regarding the German market, and with good reason, hanging in there really well above the 10-day moving average. International stuff looking pretty good, really. You got Australia, Canada, the German market, all looking pretty strong, holding 28. They all have the exact same scenario, though. They've got to hold where they are. And also the EWG, as with EWA and EWC, look like they want to go higher. They seem ready to pounce higher. If they don't, another big drop. And this one would be down to 25. Same thing, sprint to the upside, so nothing to hold it. And the longs are nervous right now on those markets. I can tell you they are watching these support levels, and if they break, they will likely bail. That will give you the snowball effect to the downside, and then you get these moves because of nothing being in the way. There's nowhere for the machines to put a where we stop, and they just let it run down until you get into resistance. So, boy, by the time we talk next week, maybe we'll have some more to talk about, but we've been consolidating these levels for over a week now. Well, maybe next week will be the key when we find something a bit different regarding these. I'm sure there's going to be questions about natural gas, etc., so I'll save those till the Q&A. But what I did want to show you is this was really interesting with the pricing. This was in our time strategy. Symbols Bill. Yeah, like that. It's Bill. We're going to trade Bill. But it was a put calendar spread, and the expiration was this coming Friday, but we already closed it out. And the odd thing about this is the stock was trading right in our range. Take a look at this, sitting right there at 100. And it was a very short-term trade. And, yeah, it's shown some volatility, but there was a ton of premium in that at-the-money option with just a few days left to go until expiration. It didn't make any sense to me. And so the fact that we're sitting right there and there's a ton of premium with a very short period of time, and I'm talking about like $3.90 or something was on the short side. It was nuts. And so we had roughly a 38% gain in a couple of days, which doesn't happen very often on these calendar spreads. They are designed to profit from a drop in volatility and time decay. So you usually need a little bit of time to go by. A couple of weeks is the ideal time frame. But to get 38% in 2 days, and then you avoid whatever that means with all that premium, that made a lot of sense. Well, it worked out really well because the next day the stock dropped $10. It dropped. I'll show you the current chart of that, but just showing you that. And this is our AI based strategy at EWOtrader.com. So it is true AI. People ask that all the time because I know there's people that are just writing computer programs and calling it AI, but AI is constantly processing data and learning. So this is true, which means the system should get better and better and better over time. As it fine tunes and fine tunes and fine tunes. So that was really nice gain there in a very short period of time. But I did want to go through and show you the chart of Bill, and you can see what happened. Now it's coming back. So we could look on Friday and say, well, you know, you bailed too soon and you could have done better. 38% in 2 days is hard not to take when you are looking at calendar spreads, but you can see what happened. It didn't quite make 91. It went down to 91, but now it's coming back up. So if it gets back up to and stays around 100 on Friday, then we could have done better. But you know, remember, you're losing some of that significant time premium is priced in the long option as well. And so I'm going to take in a calendar spread. You give me 38% in 2 days. I'm going to take it every single time. Even though we can Monday morning quarterback and come back and say, oh, well, you could have doubled that had you stayed a few more days. Yeah, but, you know, again, nobody has a crystal ball, and it just, something was weird about it and it broke. So that was why the premium was priced in there, but now it's coming back. So I checked it today and really hasn't made much of a movement as far as the overall spread. But if it stays there till Friday, then yeah, it would have done better. So, you know, I'm human like anybody else. I like to pat myself on the back when we make a perfect exit. And I like to show you, well, you know, we could have hung around there a little bit longer, but that's trading, isn't it? Knowing when to get in and knowing when to get out. And the key is something that I could just share with you. I know that when we go back and look at that, and if that's pegged to 100 on Friday, it's going to be, gee, look how much more we could have made. But you can't do that. It will drive you nuts, and you'll never be a good trader if you allow that to come into your psyche. Were you happy with the gain when you took the trade off? Yes or no? And yes is going to be the answer. 38% in 2 days on a time spread is going to always be yes. And so, okay, then you were happy with it, and then you be happy with it on Friday, even if the stock is pegged at 100. What you can do then is use it as a learning experience, right? Maybe the next time, perhaps you make a different decision. Maybe you are a little bit more patient. Maybe you trust the AI that, yeah, we're going to bounce back up coming out of the range. It was the premium, the amount of premium that was in the option scared me. There's usually a reason that they hold that much premium in an at-the-money option in the last week before expiration. It did break down, but it bounced right back. So maybe the AI is smarter than the formulas that price in volatility. Who knows? But I wanted to share that one with you and show you what had happened since then. I think it's a good learning experience, but also the psychology. If you're happy when you take the trade off, don't second guess yourself. Don't beat yourself up. Be happy with it at the time. Learn from it and take that into account next time the exact same situation comes up again. I think that's a good way to look at things. All right, reviewing some of our previous case study considerations here. Now, last week we looked at Monster, and it had gone sideways. Now, it had stayed above 100, and my commentary was, I wouldn't fault anybody that's had enough of the sideways move and was ready just to give up and go. I understand that. We said as long as it held 100, we'd stay long. So I wouldn't fault you if you wanted to hang in there either. So either scenario, I could totally understand. But look what's happened yesterday and today. It looks like we're trying to make a break above 105. Now it's got earnings coming up here in a couple of days. And, maybe you don't want to stay for that. Maybe you do. Maybe that's going to propel it higher. It's always a risk to hold it through earnings. But look at that hammer doji there. Do we bust above 105 tomorrow? If so, then you could at least get out and break even with all the time decay if it moves to a new high, and perhaps even still pull a gain out of it. But same scenario here. If you didn't want to be in it, I understand that as well. But now, if you're still in it, I think you gotta see what happens tomorrow. What does this mean? Do we break above 105 tomorrow? We're holding. We had a doji here dead on the 10-day moving average on Friday, yesterday and today, bouncing off of it. This one also looks like it wants to break resistance and it wants to move above 105. And who knows what will happen with that earnings report that comes out. I wanted to check the DMI. It got pretty low. It's not a horrible strangle with that sideways move. But the problem with this is you always want to go back and look at the movement of the stock when you're looking for strangles. And you can see all this sideways stuff. Sideways there was a little triangle that it did break out of. Sideways here. There was a decent March there, but there's a lot of sideways stuff here, which you would just be counting on the earnings report moving it. It would need the earnings report to move it, and maybe it does, maybe it doesn't. This last one over here, certainly was a nice move on earnings. So, you could do worse things and try to put a strangle on there and see what happens. Now, ABT, we had said that 110 was to ABT as 100 was to Monster. We broke it. So we broke through 110. And if you had that in your notes, then you should be out of this one. And so I'm going to cross this off. It is a loser, but we've had one heck of a run of really nice games. So you throw in a loser every now and then. That's trading. That happens. But I think you take the loss on that one. But then you could argue and say, but you're in a wave 5 pattern to the upside. So far, the wave 4 is labeled here at 46%. It could come all the way down to 61.8 and still stay within the rules, or it could even go further than that, as you know, and stay within the rules. But 61.8 is the fib level I like them to bounce off of. So to come down here and then bounce to the upside, it could go lower from here. I just think you followed the plan. When it broke 110, you got out. That was what we said. Stay in there as long as it stayed above 110, get out. So we haven't had many losers, but there's one of them. And as I said, a pretty nice run of gains. Now let's take a look at Google. What a story this was. All right, so here's where we looked at it last week. And then, boom, on the open the next day, shoom, big move lower as the news came out about their AI failure, right? And so piling on the stock, you couldn't have gotten in until the stock had basically tanked because it opened so much lower. So I'm curious if anybody did anything with that. We did. We sent out an alert, and we sent it out yesterday as it looked like it's trying to base right there. And let me show you what I'm looking at with this zigzag pattern here with where we came down. So there at the 61.8% level on the wave 4 is why we sent out the alert. We're going to see if it moves. And I was trying to break lower today. It didn't look too good this morning, but it got back above that level at the close. And if we look at the 10-day moving average, you can see we're still a little bit oversold, not as much as we were. But I wanted to give that 61.8% level a chance to hold. Again, I'm a big believer in the 61.8% fib level. It's the strongest level in my opinion. So I wanted to give it a shot there. Not happy that it's below the 50-day moving average. So we'll see if it can get back above the 50-day moving average. But I like the construction of the 5-wave pattern, as well as the fact that we've got the zigzag there on top of it. And all impulse patterns start with a zigzag anyway, if you get down to it. But let's see if it can break back above there and move. If not, then it will be a pretty quick exit. But it was on the search, as you saw, and wanted to give that a go. And also wanted to share with you that we had sent that out as an alert, upward alert to our subscribers yesterday. Looking at Apple, Apple's kind of hung in there pretty well since we looked at it. It's relabeled the pattern, but it's just going dead sideways. Now, the fact that it's in a 5-wave to the downside pattern, concerning, the wave 4 moving over, but as long as it holds above 150, and that's pretty nice consolidation. We've got a little bit of a triangle here. You can see this tiny triangle. So if it continues to hold that, something's going to happen in Apple. As you've heard me say numerous times, Elliott was, don't forget the small triangles. Don't just focus on the big ones. The little ones work too. And there you go. So that's what, about a 5-point pattern. Apple's getting ready to make about a 5-point move. It could go down, it could go up. Triangles supersede anything in the world of Elliott wave. It could be an upward or a downward breakout. We'll see. We'll probably know by the time we talk again next week, maybe even by Thursday night for our insiders. But right now, just a well-formed symmetrical triangle. Something's getting ready to happen with Apple. And then we'll look and see if we can find a new case study consideration for tonight. And there are 3 to look at, which is more normal. Remember the week then we had 33, which was the most I'd ever seen. So MPWR has been on here a couple times. Let's take a look at this. You know, one chart that I wanted to show you that was on yesterday, I think you'll get a kick out of, and we may zero back to it, even though it's not on today's search. It was yesterday. But we'll take all this stuff off. That's a pretty good looking DMI, maybe a touch mature. We haven't quite reached 40 yet, but still good separation between the directional indicators. That looks awfully good. As far as the continued move to the upside, it's in a wave 3 higher. You look at the 10-day moving average, and let's see if there's a earnings report somewhere on the horizon here. I just had earnings that caused the gap up. I like that one. That one's going to have a hard time being beaten. We'll go back and look at the other 2. TriNet. Not super familiar with this one. And decent looking DMI there too. Not quite as good looking as the MPWR one. Let's take the oscillator off of there as well. And trying to curl back to the upside. Look like we're trying to regain separation there. That doesn't look too bad either. Again, I'm not really too familiar with this stock, but if it can break above, well, it has. It broke above that previous 4, and it looks like it's ready to go higher from here. That one looks pretty good too. I'll put that one on a watch list just to keep an eye on it. And it's TNET. Happy Valentine's Day to all the ladies out there, by the way. If you're here, that's dedication, because hopefully you're out enjoying a nice meal with loved ones. But if you are here, welcome. We're happy to have you. So breaking to the upside, I think that one looks pretty good. And then Synopsis, let's see what that one looks like. I thought that one had made a pretty nice move, so I'm not surprised to see that on the list. And awfully good looking DMI here as well. So breaking above that looks like it wants to continue. That's in a wave 5 at a 55% wave 4 correction. Looks like it could easily be going to the 100% extension, if nothing else, coming to test this previous wave 5 high and the new wave 5. That looks awfully good too. The 3 results that we have look really good. So kind of feel funny showing you the other one. I just thought you'd get a kick out of it based on you're aware of what we had been looking at with the home builders, and we thought we'd just add in DR Horton, DHI. Why not put that one into the mix? So moving higher here, that's just like, look at that run. That is a really nice 45-degree angle. That's accumulation. When that kind of stuff goes on, there are institutions that are accumulating stock, and the few spikes there, you can see some of the buying, but normally it's more like this kind of stuff here. We have kind of average, solid volume, maybe tiny bit below average, but that's when the institutions are just slowly adding. So accumulation phase going on. Looks really good to continue the move to the upside there. So, our builder friends appear again. So I thought I would just show you that. But that's a odd looking doji, so that could be a different story tomorrow. Let's do MPWR for our case study consideration for this week and see how that plays out. And then we will open it up for questions, Zach.
All righty. Thanks, Rob. It's good to be back. And thanks, John, for covering for me last week. Great to see you all on all of our live streams and Zoom audience as well. So I see we have a hand up from Stephen. We don't do voice questions for this session, but if you still have a question that you'd like to ask Rob via voice on Thursday, please feel encouraged to do so. I do see Stephen has a question here in the Q&A window, so we'll just go ahead and start with that one. Kind of a two-part question here from Stephen. Are the October lows in for SPY in 2023 as well as the other indexes?
Well, dust off my crystal ball and see if the lows are in. At this point in time, could we come test the lows? I don't think we break the lows. So I guess the answer to the question, in my opinion, because all I can give you is my opinion, I don't know. I just read the charts. I think that a worst case scenario would be a test of those October lows. If we can break above this level here, break above 420 and head up to that 100% extension, at that point in time, we'll evaluate whether the indicators give us an idea that we may go to 161.8, or if it looks like that's done. And if it is, what normally happens is the C wave gets retraced. And so that could bring us all the way back down to 380 again, would be a possibility. So that doesn't get us even to test the lows. So I do think the lows are in. That's just my opinion.
Very well. Thanks, Rob. So we have a lot of interest around Tesla.
I can't imagine that. Yeah, the bounce got everybody excited again. So going to try to, the concern, as we talked about, was the fact that it is in a decent looking 5-wave to the downside pattern. Obviously, if it moves high enough, it disqualifies the pattern, and that's what people that are long Tesla are hoping for. Pretty impressive move today off of the little tight doji yesterday. Nice break above the 10-day moving average, back above 200, and 220 is not too far away, which was the next point of resistance. And as we've talked, I think we talked about it last week as well. I can't imagine that we didn't, because Tesla comes up all the time. A break above 220, and there's really something going here on Tesla. If we break above 220, I think we're going back to test these highs and going back towards 300. But we got to get above 220, and there's resistance there, as you can see. But if it breaks above that, the move to the downside here, there is nothing in the way. We've talked about this kind of stuff a lot tonight. It seems that there could be some decent moves here without much resistance in the way. And I feel that way about Tesla. If it can get above 220 with follow through, I think there's a high likelihood that it runs to 300 again. Pretty impressive today, holding above 200. And it's got support. Even if 200 doesn't hold, it's got support at 180. A break of 180, though, and then it's, go ahead and say it, Zach.
80 bar the door.
To the downside, back to that previous wave 3. 180 is the point that has to hold. 200 is just a nice round number. There is support resistance there, so good to hold there. Not as crucial as 180 holding. And breaking to the upside, getting above 200 is nice. It's an impressive day, but what really sets the stage for higher movement is breaking above 220. A break above 220, and you'll be hearing a whole lot more talking about Tesla from there. And if the markets are set up to where they're trying to move higher, that would be conducive, I think, of a Tesla running up as well. Pretty interesting move today in Tesla for sure.
Agreed. So we're going to go over to a fun question here from Angel around AI. It says, hey, Rob, with all the fascination with Chat GPT, is bots a good bet? Max headroom flashback. It's actually BOTZ, I think.
Oh, okay. Yeah. Thanks for that. Well, you know, obviously we've got probably a pretty good entry, which is what Angel's talking about. It looks really constructive to me. Let's see what the DMI looks like. Well, a break of 40 there is telling you the strongest part of the move is over. You would need to see that positive directional indicator get back above that ADX, because breaking above 40 and then breaking back below 40 is a warning sign regarding the DMI. Another thing that we could watch, which is right here, is this area of support at 24, which it went sideways, held, and broke back to the upside today. It would be a speculative trade, I think, because of the DMI, but if you want to be more conservative, let it break 25, because if it breaks 25, I think it goes to 27 pretty easily. If it doesn't hold 24, then a world of hurt back down to 21. Interesting how many of these charts have these areas where it's crucial where they are right now to hold, or you could get significant moves, because there isn't a whole lot of chop either above or below. Above in the instance of Tesla, and below in a lot of these other charts. This is crucial time. So it's D-Day right now for the markets on what happens over the next few trading days. We need to hold these levels and try to move higher if the market is indeed going to go bullish. And if we break it and fall, we could have a lot of really significant downward moves. That would certainly spike the VIX if some of these charts start to fall apart. So yeah, pretty crucial to hang on where we are right now. Long-winded answer. I think from a speculative standpoint, you could give bots a shot. The more conservative trade would be let it break 25 first. But you're right. There is, you know, everything is AI now, right? I mean, we knew this was coming. That's why we're so excited. We feel like we were way in front of the curve by already having a strategy that's based on it, that's already out and working. We were kind of on the cutting edge there. Lots of programming behind the scenes on all that. Anyway, go ahead, Zach.
Absolutely, yeah. No, that was an interesting chart to look at, and I just wanted to talk about. I think we have an offer that's going to expire around this same time next Monday, correct? For our
Jeff's Delta neutral strategy. Yeah, for those of you that were with us last Wednesday and saw that, just a reminder on the expiration, it is coming up the 21st. You know, you've got to sign up by then to take advantage of that price. And thanks for reminding me on that, Zach. And so we've been talking so much about AI and time strategies and the calendars, etc. More Delta neutral stuff in there. So if you're liking this, then you would love to have that enhancement with that Delta neutral strategy, and lots of good income type trades for your portfolio with very small amounts of risk. So a really good risk to reward strategy, Delta neutral is. So please take advantage of that. Go to the website, check it out, and get signed up if you haven't already. Hey, again, it's, you know, we don't charge anything up front. It's just a 1 month fee. Kick the tires for a month, see what happens. One trade and you get it back, or you say, yeah, it's not for me, and you walk away.
Yeah, absolutely. It's definitely a great offer to take advantage of right now. And after that offer expires, we won't be able to, or our account manager rather, won't be able to offer that discounted rate. So definitely take advantage while it's available. And I'm going to send that link here in the chat in just a moment. At this time, we're going to go over to a question here from Twitch. The user's Tony Tiger 321. Just a general question on, you think the bear market is about over?
I think that the worst part of the bear is over, because as we just were talking about with the lows, I feel like the lows are in. I think those October lows will hold. Could they get tested? Yeah, but it looks like 380 would be the area that would likely hold. Now that's if the C wave extension on the zigzag plays out. The bear market is over unless the Fed continues, in my opinion. What's the rhetoric going to be in the next day or two, which is why the futures are down 18 now. They were down 20 a second ago. So it looks like they're going to hold around 20 for a bit here. It looked like they're trying to go sideways. So are we going to have a down opening tomorrow? I think people are going to be looking to see what the Fed speak is over the next couple of days. Does it get even more hawkish? Is there a concern? I think the market is priced in one more 25 basis point cut, and then the market holds. And as I've told you, the Fed fund futures are pricing in 50 basis point rate cuts by the end of the year. Does that change? If that changes and goes away and we start pricing in more rate hikes, that could stop that C wave extension from building. We come back down, but I still think we stay in the range between 360 and 420. So I do think that for all intensive purposes, the worst of the downside risk with what information that we have now are over. People are already thinking that the Fed's going to go too far. The Fed fund futures is telling you they're going to go too far. We're going to see more signs, I think, of recessionary tails, etc. But it's the Fed accomplishing its goal. Remember, the market's looking 6 to 9 months ahead. And so if the Fed fund futures are pricing in rate cuts by the end of the year, then the market is looking towards that, to where the money supply becomes easier again, and that's conducive for a market rally. What could happen is by the time we get to the rate cuts, then the market goes down, and that's what confuses people. It's like, I thought the market wants rate cuts. How come the rate cuts are here and the market's going down? Because the market was looking at that 6 to 9 months ago, which is why we were going up then. So it's important to remember how the markets work, because I know it's super confusing when it doesn't seem like it's acting the way it should with the news that comes out. It's because it's discounted that news already.
Thanks, Rob. Just want to remind everyone out there who's joining us live to go ahead and hit that like button for Rob if you're enjoying the webinar so far. And of course, subscribe if you're not subscribed. It goes a long way, and we do appreciate it. So next up, we will go to Meta. A lot of interest in Meta.
Yeah, I can understand that one too. That stock was just left for dead. Well, we talked about,
sorry, real quick. Timothy says, do you see a put trade on Meta?
Well, we may have missed that. After this big bounce to the upside here, it was super overbought then. Will it come down and fill this gap? It came down to the 10-day moving average. So when you have a big gap up and you're that separated from the 10-day moving average, that's where your bearish trade is, because you got two things working: the gap and that separation from the 10-day moving average. The fact that it's come down now and hit the 10-day moving average and is trying to hold this 180 level, I don't know that we come down and fill the gap now. If the market falls apart, like if all these charts, because there's vacuums, right? That's what I've been showing you, is if these support levels don't hold, it's almost like a vacuum below there. We'll have some pretty ugly days. And so the downward moves can happen very quickly. That might get the gap filled. Other than that, I'm not sure that during this time frame that gap gets filled, with the fact that it's bounced off the 10-day moving average. Maybe it does. I wouldn't feel so comfortable on a put now. The time to do that was back then, and you would have had a pretty decent little trade. But I'm just afraid that we could hold that 10-day moving average within the wave 3. I could be wrong a lot. So we'll see. Let's ask about this one again next week and see how it goes.
Sounds like a plan. Next up, we're going to go over to YJ from YouTube. We'd like to look at PATH, P-A-T-H. And just real quickly, while Rob's pulling it up, I see we have a question on UNG, which Rob covered a bit earlier. So please be sure to catch the recording.
Actually, I didn't.
You didn't?
No.
I heard you. Didn't you say UNG?
I did, but I said we'd probably look at it at the Q&A, so I'll wait for the Q&A.
My apologies. I've been doing a lot of multitasking.
I don't know why you can't do 4 things at one time. So down here to the wave 4 correction level on PATH, that was a pretty impressive move. Was that on earnings, or look at volume? No, it wasn't an earnings report. And you know what? Not a super big spike, and the volume's dried up as we've come down. And that's a really good support level to hold there at 15. If you want to take a speculative shot at that one, with that move back above the 10-day moving average today, looks like, if it goes vertical again, same exact thing is going to happen. So you don't want that. You want more of this kind of a move, like we talk about all the time, because vertical moves get retraced. And so that's a pretty big move today. And if it will just calm down and go in more of a 45-degree angle, that looks pretty good to go higher to me right now. It really does. Holding 15 was really key. I will look at UNG. I did promise them that. I figured it was going to come up in the Q&A, so I was holding off. We also sent out an alert to our alert subscribers to go long on UNG, and it's continuing to build this base. It goes up, it comes down, it goes up, it comes down. It's right about where it was when we got in, so it's bounding around. But our longtime viewers will wonder, is that starting to try to build the launch pad effect, where you just have this dead sideways stuff? I wouldn't mind that, because we could get a pretty significant move higher. I think we go up possibly as high as 15 on a bounce, but the fact that it was so oversold and the separation between the 10 and the 50-day moving average, we did recover the 10-day moving average today, which is the first close above it in this consolidation. So maybe it's getting ready to try to make a move now. But I want to be really clear. All we're looking for is just an oversold bounce. I'm not trying to say that I feel like, UNG is going to go rocketing back to the upside. I don't think that. Just it's oversold. We had this vertical part of the move. So retracing some of that oversold stuff, that's all we're looking for here is a tradable oversold bounce. And it went to 110% extension. So that takes the retracement back to the previous 4 out of play. It could possibly go as high as the 61.8% corrective level, which gets it to 18. I'd be surprised if it goes that high. Maybe it does. That'd be great. But again, it's this separation between the 10 and the 50-day moving average, the vertical nature of the move lower. That's what attracted the long position here, and going sideways, consolidating here, I think is really constructive for a potential bounce to the upside.
Thanks,
All right,
Rob.
Zach. So since I kind of flailed on that, I know we're after 10, but spin your wheel and pick one more.
One more? Okay, let's do a question here from Julian Zoom. I'd like Rob's opinion on GNRC. Technicals look good, fundamentals decent.
It's gone through that break above 120 is, I agree with you, is impressive. There's a gap there at 140 that hasn't been filled yet. You do have a positive 1030 cross. You're above the 1030 and 50-day moving averages, but I think getting above 120 was more important. Now we do have the 5-wave to the downside labeled here, but this is just the first fib level, the 23.6% fib level. And as I've talked about, this is a good one to finish on, just because of talking Elliott wave stuff. Elliott wasn't a big fan, even though technically the 23.6% level is a fib level. And so as you can see, the algorithm does label it, but he was more of a fan of getting at least a 38.2% correction to up the percentages of accuracy. So even if that occurs, just moving the wave 4 higher to 38.2 or 50 or 61.8 gets you a very nice upward trade. So in a weird way, even though it's in a 5-wave to the downside pattern, we're in an impulse move to the upside in this wave 4, if that makes sense. Hopefully it does. And I would think that 140 is in the cards here. I'd be really surprised. We were trying to go back here, but it just got too vertical and too far from the 10-day moving average. But holding 120, bouncing like that, constructive start to the week. I think 140 happens, and then we take a look and see where we are then. But yeah, that was a good one to finish on. Thanks as always for your attention. We appreciate you taking your time out of your lives. Time's the most important thing that we all have, and we really appreciate when you devote some of it to us, and we do our best to make it an informative, educational use of your time. Thanks again. Have a great rest of your week.